Hey YouTube, it's Nick here. Welcome to the channel. Now, long story short, I done goofed. I already recorded this video, but my mic wasn't connected. But we're gonna jump straight into it. July was a roller coaster. We had earnings come out, basically Amazon, Microsoft, and more. We had the U.S. jobs data in the Fed. We're also going to be talking about what's going on in the market and kind of where we go from here. And then we're going to cap it all off with August and what I'm going to be doing moving forward in the market. Now, first things first is basically crypto is rallying on risk appetite while Trump's Clarity Act pledge and Tether's Treasury profits fuel policy tailwinds. Now, the main thing about the Clarity Act, and I'm gonna keep this short because I already talked about it, but if you are someone that invests in Bitcoin, or if you just care about crypto, you really want the Clarity Act to get passed because this is what's going to help you, especially with Bitcoin. It's what's going to help you get that adoption. You're going to have more rules and regulations, which is going to at least what's the word implore or make institutions less reluctant to allocating capital into that market, especially if they probably have employees. You know, you can have something like this be part of a 401k where people are allocating into it every 2 weeks or anything like that. But the downside is that especially if you care about altcoins or anything like that, it actually would probably be really bad. Because one of the main reasons why a lot of people have lost taste in cryptos is because people have been rug pulled by meme coins. There's too many. Well, there's too many coins in the market. A lot of them don't even do anything. And this is what I always tell people is that the only thing that really matters in crypto is Bitcoin. It's the only thing that really matters. Everything either lives or dies by if Bitcoin does well or not, and maybe Ethereum, just maybe, just maybe. I'm just throwing that out there. So, if you are someone that wants adoption for an asset class like this, this is something that you do want to get past. Now, when it'll get passed, I don't know, but I don't know. Now, what's happening? Equities are broadly green. S&P's up almost 1%. The Nasdaq's up 1%. The VIX went down 6%, and crypto is following the risk on tone. Now, the Trump confirmed that the Clarity Act remains a priority. We're not really too into the tether thing, but the main thing is that the markets it was really choppy for a bit. So we had a big sell off, especially in the AI trade. And then at the end of the day, Google, but mainly Microsoft and Amazon, they came to save the day with their earnings reports, and which just turned everything around. Now, the fear and greed index, we're sitting at 42 for stock, and we're sitting at about a 27 for crypto. But it was a lot higher than it was well actually no it actually was not that high surprisingly. So I mean yesterday it was at a 39 but now there's actually more fear. But the thing is that the VIX it went to about a 20.66. So this is when if you have been following the market everything was just kind of dropping and people were like whoa what's going on but now since Microsoft and Amazon came to save the day now we're sitting at about a 15. But all in all this isn't financial advice but uh July was a decent time to buy, at least in defensive things, if that makes sense. Now, other good news that we do have is that about the Ash Clash all-in-one portfolio. So they just listed a new pricing, which is basically $9 a month for the light version. But the main reason why I got this is because I hate going in between Coinbase and all of that and trying to look at my holdings on Robinhood, especially since I'm trying to make content on it. So now I once again have everything all in one place, and this is perfect. And we'll go over each of the holdings in another video. This isn't a portfolio update video. We'll be doing that video next. But as you see here, we have everything down. So we have our Bitcoin, we have our Ethereum plaque. The H bar, I got that for free from Robinhood, so I'm just letting it sit. But and then we got our VOO. Other good news, we completed the one share of QQQM and we're still building our SCHD position. We also added a lot of positions. So we have AMD. We still have the Microsoft one that we got for free through our stock referral. So if you haven't invested and if you're thinking about it, and if you don't even want to put your own money in, you can sign up for my link down below. You get a free stock from $5 to $200. And that hey, and that's up to you. That's up to you. It's links in the description below. But we also added Micron, Google, Cheesecake Factory, SoFi, Amazon. We're going to be adding a lot more but we're just gonna stay focused on cash this month. Now back to the market. Enough about me. Basically tech. It's had a big sell off. So there's some opportunities opening up, and I promise you, I wish I had more money because there are so many good opportunities out there. But I have to be smart and most of my money, it is going to be going into the S&P 500, and we're just going to be keeping cash along the way. Now, we're going to be looking at a video basically about the long duration play. This I actually think is gonna shed some light as to kind of what's going on, what happened, and then kind of where we need to go if we as retail investors. I'm not a hedge fund manager. I'm not someone that's built a business. I'm a regular, everyday person, probably like the person watching this video. So I think you could also take a little bit from this as well too.
Had to put together over the weekend. And essentially, he said, great things may come to those who wait, but only the things left by those who hustle. He attributed to Lincoln. I went down a rabbit hole. I couldn't find that. But the bottom line, though, is opportunities are out there sometime. And, you got to be patient. But also the other side of this, those who hustle, they can move in haste too at sometimes. Yeah.
So I think what's really happened is that we're suffering from the leverage. We're going to have, like you said, a lot of people who are going to be shocked by another 2 or 3 hedge funds that are going to blow up. I think you can probably see NASDAQ go lower, but I decided yesterday, let's be realistic. I've made too much money in value. You're looking at banks like Bank of New York trading at like 2.5 times book. JP Morgan, historically, their price to book, it's ridiculous. And so what I'm looking right now is I want that long duration play. I love the things like Amazon. I love the things like Microsoft. I mean,
let's talk about Microsoft because that move yesterday in Microsoft, from a point perspective,
right?
I mean, 17% on a $1 trillion company. That's huge. That's one of the biggest point gains we've ever seen.
Yes.
These are the earnings. What is it about Microsoft here, though? Because you'd say right now in your mind is like the clear winner, the clearest winner.
The clearest winner.
Now, before he gets into it, another thing that I've started doing is that while I go on this journey of investing, I want to learn. I want to be able to spot opportunities in the market and not have to wait for Fox News to talk about it or influencer or anything like that. So one of the things I've been focusing on is trying to listen to some conference calls and trying to learn balance sheets. That way I can understand what these companies are doing, and then who knows? If I find something out there, then I could be the first person to take advantage of it. Because when no one's talking about something, that's when it's the best opportunity. But you have to find it to begin with. So hopefully, if I can do that research, that way I can use my own research and skills and knowledge, so that way I can capture things like this down the line as I continue to grow in this. So I'm just throwing it out there. So I did look at the Microsoft conference call. I did listen to it. Basically, they have a lot of money that's going into AI, capex and everything like that. And I think with Microsoft, what they did that kind of turned everything around is that they said, you know what, we're not gonna keep raising. We're not going to keep raising the bar with it. And then another one that I really liked was the Amazon conference call. That one, they're seeing more people using AI, and their whole industry as a whole is just doing well. But main thing that I'm saying is that if you can take the time, try and figure out some way that you can kind of understand these things, so that way you can spot it, so that way you don't have to wait for these people to come on here and tell you what's good and what's bad. That way, if you look at it yourself, you can figure that out on your own. And I understand it takes time. I understand. We're retail out here. We're not hedge fund people. We don't get paid to do this.
So number one, their operating margins went up dramatically.
Right.
That means they're efficient. And then their raw profit margins went up too. So here's what it signals to investors. Number one, we all knew if Microsoft can't make money on this big investment in AI, we have big problems, bigger than anything else. Microsoft came back and said, not only are we more efficient, not only are we making more money, our raw profits are going up, so don't worry about what we're going to be investing over the next year or two. I mean, what a
But they were able to convince Wall Street, whereas Google couldn't,
Yes.
which is intriguing to me.
Well, I think Google it's the whipping boy. Google is always sort of the B player. Google's always the thing that never quite executes good enough. But also, let's remember, Google's doubled its market cap recently, where Microsoft is sold off. I mean, there was a time earlier this year, it was down, Microsoft is 35% from last October. I think what it's really about is Microsoft's a catch-up trade, and Google is the already made you money. Why not take some profits off and move it around? I think people are selling their Google to buy Microsoft to rotation.
You like Amazon as well. Amazon acting really great, so it's sort of similar situation. I want to fast forward though to the future, because in your notes you talked about edge computing. I love that. I like where we're going, humanoid robots, the physical AI, and all this stuff. Walk the audience, explain to them what it is, and why and who is going to benefit the most.
Okay, so the first thing is the whole idea about edge computing is taking AI off the cloud and onto the devices in our hand. Also automotive, also robots, also what we call, remember the Internet of Things we used to talk about?
IoT.
IoT, it's back. So Qualcomm, number one place. They got a little product called their Snapdragon platform is already being used in these things. Number two, you've got Apple. Apple's got the hardware, has all, hundreds of millions of affluent people across the planet. They have all our data. They know everything about us. Those little phones, they're going to start getting that data on the phone versus going up and down, spending all that juice, spending all that expense. ARM, I think it's more of a secondary player, but ARM has that architecture, that intellectual property to make edge computing work and get everything on that little chip.
So it's interesting. I was reading a note. You think it's 1998, or if we were to go back. So yesterday I kept talking about long-term capital management. Kind of reminds me of this kid, right? Brilliant folks. They won Nobel prizes. People gave them a lot of money to manage, and they blew it up.
Yeah.
Ironically, it was right here at the same point. By the way, the Nasdaq dropped 30%, folks, 30%. And if you gave up then, you missed the next move, which is a 300% move. So it might be a couple of years, but this could be still a big ride to the upside. No.
It is. And remember, what was happening in 1998? We had long-term capital management, and also remember we had the Russian bond default,
right.
and everybody's worried: are the banks? Does your bank have Russian bonds hiding in it? Today, the little Russian red scare is inflation. So what the Fed did in '98, they lowered rates to try to shore things up. It created all this leverage. I think what we're going to see today, same idea, different trade, where we want to see the Fed raise rates to kill inflation. And if we can do that, investors are going to feel so much better about the prospects of AI, and you're going to have same things. So just remember, just because the trades were opposite in 1998 doesn't mean we won't have something like this. I think the AI trade is taking a breather now, but I think we're going to have one more leap forward.
Right.
Again, it's not about rates going down.
Right.
It's about killing inflation, just like it was about shoring up confidence in banks in '98.
So I guess the moral of the story is that, be prepared for more weakness, more bouts of weakness, but don't give up on the overall rally.
No.
That would be a huge mistake.
No, right now I'm just in phase one of 2 or 3 buy spendings. I want to see, we see the box of the S&P.
Right.
I did some buying yesterday, but if we get more weakness, if we hear more, some hedge fund blew up, I want to be a buyer and back it up. And I'm going to sell my value, which I love my value stocks, but I'm going to sell that. You want to, fade the banks, get into the AI.
Great stuff, Lee. Really appreciate it.
Okay, a couple things. One, a lot of people believe inflation is like 8%. So we're just gonna throw it out there. But basically, is the Fed gonna cut rates? A lot of people that I've been seeing have said that it actually would have been better. I've done some research and I can kind of see why. Long story short, Fed rates kind of stayed stagnant. So they didn't raise, they didn't lower them. So basically, if it gets risen, then the money that you have to pay in interest towards basically borrowing money, my bad, but basically the money that you would pay borrowing money, it increases. So that'd be your credit cards, your mortgage, a car loan, anything like that. So in the short term, you would just see elevated prices, and a lot of people don't want to pay elevated prices. Now, they didn't mention this here, but basically another thing that happened as well is that consumer spending went up about 3% as well too. So people got the money. People got the money, but another thing that went up was that people's paychecks are going up. So everyone is making, actually, believe it or not, everyone's making more money than anyone ever has in the entire history of the world. Like, this is the most money like people have ever made. But at the same time, you have inflation outpacing that. So even if they say it's a four 4% inflation, even though you could argue it's like 8, even though you are getting paid more than you ever have in the history of the world, you're still paying more for the assets or at least not the assets, but just the commodities and the luxuries that you want to enjoy as well too. And a lot of people don't want to do that. A lot of people don't want to do that. So that's the main thing with the Fed. Another thing that they didn't mention is that they didn't even add that many jobs. It was actually as low as when the pandemic was coming around, and then also on top of that, a lot more people are getting laid off, or people are kind of hugging their jobs a little bit more too, and hiring has kind of slowed too. So that's a little bit of some fear in the market. Now, when it comes to AI and anything like this, because I have to keep saying this, these analysts, not in a bad way, but like they don't think about the average American or even a retail investor, but they think about themselves, their friends, the people in their connected group. So they don't necessarily live the day-to-day lives like an average regular person. And they don't, uh, most people that I have encountered or even that I see online, a lot of people hate AI, but you know what? I think people have a love-hate relationship with AI because a lot of people use it too. And some people you're kind of forced to use it too, especially if it's like at your place of work, you actually might have to use it. And like any device you have, you get on the internet, you get on an app or anything like that, there's going to be some AI function that's kind of integrated into it too. So it not for lack of a better word, it's being forced onto people. So you're kind of being forced to use it, but it's still an opportunity at the end of the day. Those that understand how to create systems with the technology and how to make other people's lives easier or how to sustain running stuff like this, those are going to be the key people that win as far as like your average everyday people. Now, when it comes to things like this, the average person, they do not care about if Microsoft or Google's shares or anything like that go up. So that is one thing to throw out there. But me, I care because I invest in it too. And before I forget, there's also one last video I want to talk about, and this is basically the semiconductor stock soar as strong Microsoft outlook revives the AI trade.
Let's talk about this move in big tech right now, because big tech, of course, is in focus with these numbers. What are you expecting out of the close? I think the biggest thing that the market is really focused on are a couple things. Number one is rate of change growth on the back end of this year, which is why I think you're seeing some software names take a bid after a year of struggling, and the semis are now having some concerns on that. The other is the CapEx numbers. The market is concerned with the ability to fund all this $1 trillion plus of CapEx that is the trajectory of estimations for next year. So this is why you've seen these big gyrations. At the end of the day, we are looking at the August and September, which we think is going to continue to be very choppy, probably more downside than upside, as an opportunity to rotate out of defensive positions and into these names that have taken 30 to 50% hits. Because we think when the dust settles post-Fed, the market's going to come to the realization that the fundamentals are strong, demand is strong, and the economy itself is going to accelerate. So we think this is really setting up nicely for being able to buy the dip incrementally into these areas that still have fantastic demand. So these short-term gyrations hopefully does not shake everyone out of their positions.
Well, I know that you've been going for cybersecurity and software stocks, but certainly if you do get a buying opportunity in some of these bigger names, I'm assuming that's attractive to you. But you mentioned the economy, you mentioned the Fed. I want to talk to you about not just the meeting yesterday, but we got a lot of data this morning. In particular, we got GDP for the second quarter. This was the first read, and it came in lighter than expected. And I was digging into the numbers and the reports to kind of see where we saw the changes here, especially from what the market was looking for. And imports rose, but that is because of the big AI spend, the data center spend that we're seeing. I also found kind of a bright shoot here. Consumer spending jumping 3.2%. A lot of that, according to the government report, was because of tax returns. So Americans weren't shaken by higher gas prices that we've seen since the Iran war. They weren't concerned about tariffs, about supply issues. They spent. And that tells me that that's actually going to continue to boost the economy, especially if we get a pause in the escalation we're seeing right now in the Middle East.
We couldn't agree more. These folks that are worried about a recession, we don't see anything in the data that we're looking at that gives us any concern. The consumer's been extremely resilient. And to your point, we think by the time we get to the midterms that oil will be back into the low 70s, 60s, and that's going to be another tailwind for the consumer, which is why I'm concerned that the Fed is going to make a mistake and do some type of tightening in September. At the end of the day, a 25 or even 50 basis point rate hike is not going to get inflation down to 2%. And to try to slow the economy for the sake of trying to get to 2%, the damage is going to be much more than what the benefit would be. So I hope Warsh and their team members let the markets do their thing. I would argue the bond market is already doing the tightening for them. So if they just get out of the way, let the capital markets do the work, I think we'll be a home run for this year.
We had that discussion yesterday on the program, and I actually agree with you. I think that we are seeing the yields in the bond market doing the work. And maybe Kevin Warsh knows that because he kept talking about that 2% target at the end of the day, but not pointing to any appetite for a hike. So we'll see what September.
Now, as we look at the portfolio, as you saw earlier, we did add all of those into the company. We had our Microsoft sitting there, so hey, I wish I could have added more money, but I put most of that money into QQQM. So we're already getting our exposure to that, and the next goal with that is to still kind of build up QQQM. But I'm fully prepared for what's about to happen in August. I'm prepared for a 20% drop in my stocks. I'm prepared for a 50K Bitcoin. I'm prepared for it because it's a midterm year. If you look at charts or anything like that, you will see that basically this is always a tricky month whenever it comes to any type of investment. So as you see with the fear and greed index, it's sitting at 42 for stocks. It was actually a little bit lower when everything was selling off, but it went up about three today. And then crypto's sitting right there too. But like I showed you on the VIX, it was elevated all around to a 20.66. So like people were scared, and I think that that's exactly what we're going to see in August. That's another reason why I am just focusing on cash for the rest of this month. It's just going to be cash. If whatever I use my debit card for, I'm going to get cash back on my Bitcoin if I can, and then if I'm holding cash, then I'll earn a yield on that, which can be converted into Bitcoin. So we've stopped Bitcoin buys. At the most, we might just do $1 a day just to keep up that habit because a sat is a sat. And then if we get gold below 4K, we'll add a little bit there. If we get like 1300 in Ethereum, we might add, a little bit in there too. But the main thing that we're focused on all for the rest of August is just going to be the S&P 500 and honestly SCHD. That's really it. Like say what you want, SCHD has been killer, and I'm contemplating just instead of dollar cost averaging $2 a day that I've been doing into it, that I might just honestly just buy the share every 2 weeks, or at least half of a share every 2 weeks, because I don't see this going anywhere. Mainly because we still have geopolitical conflict. So when everything does start dropping and selling off, that's when SCHD is going to do the best when the whole market is fearful, because SCHD has a conglomerate of a lot of high value companies in it. So we're also going to be adding our positions into AMD. We're going to be adding some Microsoft. Just kind of let that cool off a little bit. Micron, Google. I don't understand why I wouldn't have Google. Like I do YouTube for crying out loud. So and then that's what the kind of the direction I'm going with the entire portfolio is now. Like what? companies like do I actually like and that actually have profitability for the next couple of years. And so you're going to see a lot more tickers in here as the month goes on. We might, and this is little money. This is little money. We're going to probably be doing $5 here, $10 there. Like if we have that in the budget, but we're going to build up a lot of these positions, but we're still going to keep VOO as the dominant position in the stock side of the portfolio. And then the goal, honestly, for the rest of the year is to kind of get this neck and neck with Bitcoin. Now, if I'm doing $5 a day, it's gonna take a long time. It might get to like 30% by the end of the year if we keep doing $5 a day. But the goal is to turn VOO up, switch that to about $10 a day. Honestly, if I reach a share of VOO, the moment I reach a share, that might be when I start doing it to $10 a day because it'll go up higher than $5 a day because sometimes like I feel a little bit froggy or if there is a big dip like early in the morning when the market opens and I catch it, then I'm like, okay, let me just boom, $5 there, right? $10 there, like just something, right, to add it to the market. But that's really what we got today. If you made it to this point of the video, thank you. I hope you learned something, or at least if this was valuable, because the main thing with this is that this entire portfolio has been started with just $1 to $5 a day. I'll keep saying it and I'll say it again. I'm not a hedge fund manager. I'm not someone that's built up $1 million business or anything like that. And the thing is that I feel like that I can put money into the market. And now I am long ways away before I can just start buying 50 shares here, 50 shares there of companies. But the main focus is holding things that I don't want to sell. That's another reason why a lot of these positions are so small because I don't ever want to sell them. So if I can just add a little bit to them over time, then I already because 2017 is going to be crazy. It is. And I think now is accumulation for everything. And I think we're just kind of seeing like what a little bit of what can be when it comes to this entire market as a whole, not just stocks, but also Bitcoin as well too. So we're gonna keep building up cash in August. That's literally all. And if you want a little bit more about like the strategy that I'm moving towards, that video will be a link in the description as well. Which basically all started because I got my one share of QQQM, and we're still gonna invest in tech. But if we go below my average cost, then I'll add it to it. But right now, I'm kind of happy just getting one share. Now I want to build that one share of VOO, the S&P 500, and then just kind of let everything else ride. That's really it. So if you made it to this point of the video, and if you enjoyed it or if you learned something, leave a like. That helps. If you are new and want to be on this journey with me too, subscribe. And then I will check you all in the next one. So on the next video, we'll actually be breaking down the entire portfolio, why I have everything, and what I'm planning to add in the future. And then it'll basically just be a portfolio overview for the month of August. All right.